Well, hello everyone and welcome to Momentum channel. My name is Mo and today we're going to be talking about one Dividend King stock that is recommended to buy and hold forever. And in fact, this company has been paying its dividend and increasing it year after year for the past 65 years, which is just incredible. And that company is no other than Procter and Gamble, which is a consumer staples company traded on New York Stock Exchange with ticker symbol PG. Procter and Gamble does pay a dividend of 2.24% annually, and it was last traded for the price of $155.14. From a dividend safety perspective, Procter and Gamble has a safety score of 99, making it a very safe dividend payer. Procter & Gamble Company provides branded consumer packaged goods to consumers in North and Latin America, Europe, the Asia Pacific, Greater China, India, and the Middle East, as well as Africa, operating in 5 different segments: beauty, grooming, healthcare, fabric and home care, and baby, feminine and family care products. The Procter & Gamble Company was founded in 1837 and it's headquartered in Cincinnati, Ohio. You definitely can see a lot of various familiar brands names that you've come across, such as Dawn, Olay, Charmin, Cascade, Tide, you name it. And all of these are different products and brands that belong to the Procter & Gamble Company basket of brand and product names. From a perspective of stock price volatility perspective, Procter & Gamble has a score of 0.28, suggesting it is very low volatility. Beta is a measure of volatility or systematic risk of a security or portfolio compared to the market as a whole, and a beta value that is less than 1 means that the security, in this case this stock, is theoretically less volatile than the overall stock market. Moving on, just wanted to bring to your attention that most recently, Jim Cramer, the famous host of CNBC's Mad Money show and the experienced investor, had indicated that investors should stick to Procter & Gamble as it's one of the safest of safety stocks in his words. According to him, you want something, as Jim Cramer says, you want something that can cope with rising raw costs by passing them on to the consumer because they have scale and superior brands that can command higher prices. And Procter & Gamble is the one that he was recommending as well. It's also worth mentioning that Procter & Gamble, in its fourth quarter earnings call back in January, had indicated that it will implement more price increases this year after raising some of their prices already earlier on in the pandemic, which helped grow their healthcare and fabric and home care segments in terms of their revenue in that sector. Looking at some of the key metrics, Procter & Gamble payout ratio for its stock is at 60%, which is considered to be low for consumer staples, and its forward payout ratio is even lower at 56%, giving them a ton of room to continue to grow their dividend payment year after year, which they've done already so in the past 65 years. During the recession years of 2007, 2009, the sales for Procter & Gamble was down only by about 9%, which is considered average growth during those time frame, and the stock was down by only 36%, which is better than that of the S&P 500's negative 55% return during that time frame. Looking at the past dividend growth history, and the last time that the company increased its dividend goes back to April of 2021. So you could potentially expect another increase in 2022 around the April timeframe. And back then, the company increased their dividend by 10%. In the last 5 years, they've increased it annually by about 4%, making it a slow grower in that sense. But in the past 20 years, looking at the longer time horizon, they've increased it annually 8% per year, and it's considered to be fast grower. It does appear that based on the last increase, Procter & Gamble is trying to catch up and gradually continue to increase it to bring their average dividend growth to a higher rate from what we have seen probably over the span of the past 20 years or so. Next, we're going to take a look at timeliness metric, which measures how far above or below a stock's current yield is compared to that of its 5-year average yield, with the idea being that yield tend to revert to their long-term averages over time. In this case, for Procter & Gamble, their current dividend yield of 2.24% is 16% below their 5-year average. As a result of that, it might suggest that investors could keep a close eye on the Procter & Gamble, both in terms of its prices and its dividend yield and forward price to earnings ratio, and kind of pull the trigger when this dividend yield hovers a little bit closer to that of its 5-year average. Or if you are considering it for a long-term, investment, it never is perhaps a wrong time to buy stocks like this that have been paying their dividend kind of consistently for so many years. You can always start to form a position if you don't have shares of Procter & Gamble, and as the prices change and evolve over time, then kind of add more to your existing shares and take advantage of lower prices when it comes, if that ever comes. From a forward price to earnings ratio, currently we are seeing that for Procter & Gamble, the ratio is at 24.9, which is higher than that usual forward price to earnings ratio, the 5-year average being at 22.9 for Procter & Gamble. The last trading price for Procter & Gamble is hovering a little bit closer to their 52-week high price. Their 52-week high price for the stock was at $164.21, and the lowest price the stock hit in the past 1 year was at $125.98. Did you know that since 1970, dividends have made up 40% of total returns for stocks in the US and Europe, according to data by JP Morgan and cited on the Wall Street Journal? Total returns actually measures capital gains plus dividends received. That's what we're talking about, total gains, which indicates that dividend paying stocks, and particularly the dividends that you earn, can play a huge role in terms of your overall return that you can expect from your investments. So keep that a close eye on that as well. We're going to take a look at a number of additional financial metrics such as earnings per share, shares outstanding, total sales, return on equity, return on invested capital, and earnings per share growth, just to have a better understanding and assessment of this stock. Earnings per share, ideally we'd like to see this number consistently grow over time. In the last 12 months, Procter & Gamble was showing $5.66 earnings for each share of it, and in the next 12 months is expected to have even better earnings per share, with the EPS being at $6.22, the highest it has had in the past 10 years. In terms of outstanding shares, we'd like to see this number declining over time, and that is the case for the most part. In the last 12 months, we are seeing 2.57 billion outstanding shares, which is less than that of 2021 or that of 2020. Though in 2019, the number of outstanding shares was the lowest in the past 10 years, with being at 2.54 billion shares. Total sales, ideally, we'd like to see this number consistently and steadily grow. It hasn't been quite the case. There seemed to be a little bit of that deep decline back in 2016 and 17 and 18, but since then, it's kind of recovering back since those lows, currently at $78.3 billion in total sales for the past 12 months. Although it's not as high as that of 2012 or 2013, it is still showing a growing trend since that of 2019. Return on equity, which measures how many dollars of profit a company earns for every dollar that shareholders have invested in the firm, is showing 31%, which is considered above average. The 15% is the preference for consumer staples. Anything above that is desirable, and this is almost double that amount, which is quite desirable for us. The new other measure and metric that we've added here is return on invested capital, which divides a firm's profits by the money that both equity and debt holders have given the company to, and it actually helps us gauge management's capital allocation skills. And for an advantage firm, typically they are able to earn stable and above average return over time for invested capital. In this case, the 12% is our preference for consumer staples, and you'd see that across the board, the firm has been able to hit that, and in the past several timeframes actually exceed that quite well. For example, in 2021, their return on invested capital was 22%, and in the last 12 months, it's showing to be at 21%, well above that of 12% expected number for us. Looking at the stock return in the past 1 year and the past 5 years, here we are merely looking at the stock price return. This doesn't take into account your dividend that you're gaining from the stock. In the past 1 year, your return based on stock price is at 23.15% positive, which is quite remarkable. And the past 5 years, the stock is given a return of over 70%. Just incredible. Next, we're going to take a look at analysts and their coverage of the stock. There are 14 analysts on TipRanks covering the stock, with 9 of them have a buy rating, 5 of them have a hold rating, giving the stock a moderate buy overall rating, with the average price target for Procter & Gamble in the next 1 year being at $170.62, giving the stock an upside of 9.98 or close to 10% upside. Next, we're going to take a look at analysts on Yahoo Finance, which have a price target of $165.63 for the Procter & Gamble stock in the next 1 year. Lastly, we're going to take a look at analysts on Simply Wall Street and their assessment of the fair valuation of Procter & Gamble stock. According to them, fair value for this stock is at $227.59, suggesting that Procter & Gamble stock is undervalued by close to 32%. Well, there you have it, folks. A quick look into one Dividend King stock that is perfect for dividend investors to buy and hold forever. Of course, as long as the fundamentals of the stock remain intact, just how it has been in the past several decades, in fact. We hope you found this video beneficial and gained something of value from it. If you did, don't forget to give this video a thumbs up and share it with someone else who might benefit from the video as well. And of course, subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, whether it's investing in the stock market, including dividend stock, growth stocks, and penny stocks, as well as discussing ways to reach financial freedom. Thank you, and we hope to see you next time.